It's time for Physician Family Finances, the show where physician moms and dads like you can get the answers and encouragement you need to turn a good earned income into great life outcomes for tomorrow and today.
Hello, physician moms and dads. I'm Nate Reineke, certified financial planner and primary advisor.
And I'm Ben Utley, certified financial planner and the service team leader here at Physician Family. Well, folks, today we have a very special guest. He's a friend and colleague of mine named Ken Eremita. Ken is a CPA who practices in California and across the nation, and he specializes in tax preparation and accounting for self-employed physicians. So today we're going to get some insights, some tax tips, and some things that you can use in your life, probably whether you're self-employed or not self-employed. Ken, welcome to the show.
Hey, thanks for having me on.
So, Ken, I want to hear a little bit about you. So, you do tax and accounting work for self-employed physicians, and that's a pretty specific focus, right? Just like us.
That's right.
Yeah. How did you figure that out? How did you land on self-employed physicians?
I guess I kind of fell into it, honestly. I started my career in public accounting, like other folks pursuing that career, at firms. Kind of worked my way up at progressively larger firms until I kind of, realized that I wanted to do something on my own and perhaps not work with big corporations.
Yeah.
And so, I was pretty young at the time, and I kind of left to start my own thing. I was like 25, had some savings and stuff like that. And then when it came time to market, I think that's when I kind of realized that being a good tax professional does not necessarily mean you're good at figuring out who your market base is. And so it took me some time. It definitely took me some time to kind of figure it out, but been very fortunate. My stepmom is a physician, and so she connected me with my first client, who was a self-employed physician. And so, I kind of got an understanding of physician finances from that one client. And over time, I started talking to more of her friends and getting referrals, and that became something that I just knew. And so at some point, I decided that would be a good, focus and niche, because it seemed like a lot of people that were coming to me were saying, hey, I got like this tax guy, and it's always this fire drill at the end of the year. I have to figure out how much money I have saved so I can pay this tax bill, and I don't want to do that anymore. And so I said, oh, okay, yeah, I get this. I've seen this before. And so I kind of realized that that's a lot of value that I'm providing. And so that's when I decided to focus on that niche.
Yeah, we love people like you, because we hate when people have to set aside too much money for their taxes because they don't know how much they're going to pay, and then they can't invest, and it's always this waiting game to get the money in the market. And so when they have someone like you by their side, they get to invest confidently. It's always stressful when they don't know what their tax bill is going to be, and they have to park as much money as they can in a savings account till the end of the year.
Now, you said we love people like Ken. There's another element of Ken that I really like. So, Ken's married, he's got children. Can you just give us a tiny little sliver of home life? Because everybody who's listening to us has got kids, want some or had some, right?
Yeah, so I am a father of a 16-month-old boy, and got married a few years back, and we're pretty fortunate to have our boy now. And that's a little bit of home life. Was up
What does he
last
do
night around.
what's he do that's cool?
Uh, I just like the way he smiles, honestly. I like making him laugh. Um,
Nice.
he likes being held upside down. So
Oh yeah.
I like holding him upside down, throwing him on the bed, throwing him against pillows. He really enjoys that.
Pediatricians, hold your ears.
Yeah.
Oh, nice.
I have the same stories and the same shocks and horror in my wife's face that I'm sure you see every day as you're throwing them against the pillows.
Uh,
Yeah. And
uh,
definitely had those freakouts where we go to the emergency room and like, what the heck, I hope
yeah.
he's
Yeah.
okay. And
Yeah.
so
Do
learning,
do
and
you
then
feel
it's
I went to the ER a couple times with my kids, and I got there and I just felt helpless. Like there's these things beeping around me, and there's people hurrying and scurrying around. I'm hearing strange sounds, unusual smells. My kid's in a bed looking sicker than she's ever looked, even though she's not terribly sick. And it's just I have to imagine that the way I felt about having my kid in the ER would have to be a little bit like how some physicians feel when it comes time to like figure out their self-employed taxes, right? They got all these receipts, they got all these
Mm,
revenues, expenses, don't know what you can deduct. There are people scurrying around telling them what they could what they could do with their taxes and not. So it's I think a lot of physicians come to us and they come to the show thinking, I should know this. I should know this, right? But when I flip the script and I say, oh, I was in the ER, I should know this, they all laugh, right? Because that's silly. That's
mm,
silly. And what
yeah,
it comes down to is smart people hire help,
mhm.
right? Smart people know just they
right.
don't know everything. And that's why I like to have you on, smart person.
Thanks. Yeah. Yeah, it's funny that, a lot of the comments that physicians will make will be like, "This is your first kid, isn't it?" And it's like, "Yeah." How'd you tell?
Yeah. All right, Ken. Well, let's get into some questions here. Um, so the first one I wanted to talk about is some people are under the impression that when you make more money, that they pay more in taxes, and we know that isn't exactly right. But can you explain what it means to have a marginal tax structure?
Yeah, so I think what people can sometimes get confused about is there are different thresholds with your earnings to where once you get past a certain threshold, your tax bracket goes up. So you're paying a higher tax rate. But what most people, or what some people confuse, is they think that now that you're in this above this threshold in this new bracket, that all of your income is going to be taxed at that level. When in reality, it's just that income above that threshold that's being taxed at that level.
Mm-hmm.
So,
So to break it down, it's like from from zero to a certain amount, you pay, I don't know, what's the lowest marginal tax bracket? We don't even think
yeah,
about that anymore because we never see it.
so it's
Lowest
like
marginal?
zero to yeah for filing joint,
Yeah,
0 to 20, around 25K, you're paying
yeah.
about 10%.
Yeah.
25K to 100K, it's about 12%, and then like
Okay,
100
so
to
stop
200,
there. Stop there. So
yeah,
the 10% you pay on that first bracket, and then you get into the 12% bracket. So what I hear you saying, and I just want to clarify this for everybody, that
yeah,
because you're in the 12% bracket, you only pay 12% on the money that's in that bracket from about 50 to 100K. Everything that's below
right,
sorry, 25 to 50K, everything that's below 25K is taxed at only 10%. So, we
right,
have listeners that are in the 24% commonly. I believe 37 is the top. Is that right? 37 is top marginal rate
that's right,
nowadays. So, if you're making $1 million a year, you're not paying $370,000 worth of taxes because of your 37% bracket. You're paying 37% on a certain amount above a threshold. And everything below that threshold goes at less than 37%.
absolutely
Yeah.
correct.
I've actually encountered physicians who thought that if they made money beyond a certain point, they would lose all of it to taxes, to
Mm,
the point that they're like, no, I don't think I want to work anymore because I don't want to, lose all my income. I'm like, that's not how it works. You're always better off making more money, even
Right,
if you pay a little more in taxes as you go.
mm-hmm.
Okay.
that's true.
Yep. Okay. So this is one that I hear about a lot. Sometimes physicians will incorporate, and by the way, sometimes they don't know why.
Hmm.
Someone just told them to. Okay.
Yeah.
The reason why is to avoid FICA tax. So tell us who that strategy is right for, and maybe how it works, and what a physician might do with that strategy that gets them or keeps them out of trouble with the IRS.
And start by telling us what FICA tax is.
Okay, yeah. So FICA tax is basically the payroll tax that you pay on all your wages. So doesn't matter if you work for someone else or for yourself, you're paying into Social Security and Medicare.
Hmm.
Those are the two components. And so the strategy of incorporating is usually good for folks who are getting a significant amount of money through contract work, and those contracts pay quite a bit higher than an equivalent, wage for that specialty. And so the idea being that, if you're running, when you incorporate and you have to pay yourself a reasonable wage, um, there's money above and beyond that reasonable wage that can be just taken as distributions, and you're not paying any payroll tax on it, any
Mm.
Hmm.
FICA tax.
How much do you save? Well, look, can we work with like a really easy example? Because you said reasonable wage. That's
Right.
a real IRS term, right?
Fuzzy.
Yeah.
Yeah. So
Yeah, it is.
use real round numbers, and so let's say a reasonable wage determined by you, the IRS. Like, what is that? How does that work?
Yeah, it's determined by the business owner,
Mm-hmm.
basically, and then the IRS can scrutinize on that and say, okay, is this actually reasonable? Um, the best way to support that that wage, that amount, is to look at um, BLS data, like the Bureau of Labor and Statistics. They'll
Mm-hmm.
usually tell you in which geographic region for which specialty those wages typically are, like the low end through the high end. And so you want to choose somewhere in the middle, or somewhere that makes sense, that's reasonable, basically.
Mm-hmm.
And so
So,
if you choose something out of it, you can get in. Typically people, where they run into trouble is when they choose something very low that is not even, like an
right.
unheard of wage for that specialty.
Well, let me throw out an example to put some numbers with this to our listeners. You can tell me if this is a little jacked up, but let's say I'm a doc and my net income, the money I make after I pay all my bills and bill all my patients is $600,000. And you look in the BLS and you see, oh, reasonable comp for this person is $250,000. You set wages to 250, so you're taking home about $20,000 a month, right? Um, but then you got that other $350,000 that's on top. Am I right so far?
Right. That's
Okay.
right.
And so the FICA tax that is saved is I'm correct, is 15.3% about. But
Yeah,
there's also some of that Medicare continues even though the Social Security drops out, right?
right. Yeah, so the Social Security drops off around 170, and then
Uh-huh.
it's just Medicare after that. And then there's
Okay.
a like an extra percent on Medicare after 200.
Uh-huh. Okay. So then what is the potential tax savings for someone who's, I call this playing the FICA game. Long ago when I incorporated my business, I had a CPA who was a partner and he called it the FICA game. So what if I'm in that boat, I'm making 600, I'm paying myself 250, I'm taking home 350 in profits or distributions, like roughly what is my tax savings for this?
Yeah, so generally what I find is that the reasonable wage is always going to land somewhere close to at least 200 typically.
Hmm.
And so for the sake of this like generalization, um,
Hmm.
you would assume that someone is going to be paying themselves at least 200,000. And so
Hmm.
at that level of wage, the Medicare component on payroll tax is 2.9%.
Hmm.
So 2.9% times their distribution is essentially their tax savings.
So if they're distributing 400,000, it's about 3% of 400,000. So we're looking at, wow, what,
Well,
$12,000?
yeah,
And I guess you have to kind of weigh the math here and figure out if that $12,000 worth it, right? Because now you have payroll to run and the
right.
work that goes with that, and payroll service, and maybe a separate return if you've chosen to incorporate. Not to mention, it just feels like more administrivia to me, right?
Yep. There's going to
Yeah,
be more administration fees.
yeah,
Um,
yeah.
and then there's also some states will charge some sort of corporate tax sometimes. Like
Oh,
California, it's 1.5% times net.
okay.
So
Mm.
yeah, so it's and especially now with the tax law changes, they're closing the PTE loophole likely,
Hmm.
and that was a big another big reason to incorporate was
Yeah.
essentially the business owner could write off a portion of their personal state income tax through their business, and they're
Yeah.
closing that loophole. So
Yeah.
Mm.
yeah,
I think salt cap and PTE is that's another show.
yeah,
And that's assuming that it survives this uh, big barbaric bill.
yeah, exactly.
Okay, Nate. I think
Yeah.
we hammered FICA game.
Yeah. So I wanted there's one piece here that I want everyone to hear, which is, Ken said 200,000. So if you you're incorporating, you plan to pay yourself 50,000, that's a big red flag right there. You're
Yeah,
asking for
Yeah.
an audit.
Yeah.
Okay. Okay.
yeah.
Let's talk about tax saving strategies. So can you walk us through some key tax saving strategies doctors often miss out on, especially, docs in a high income brackets?
Yeah. Um, I would say the biggest one is the pre-tax retirement strategy. So basically,
Mhm.
if they have a 401k, 457, 403b, they should be maxing all their contributions, pre-tax contributions to those plans,
Mhm.
especially if they're in a higher tax bracket. Um, and what I would consider higher is anything above 24%, which is anything above basically $400,000. Once you're cracking over $400,000, they should be, maxing their pre-tax retirement
Yeah.
contributions.
Mhm.
Nate, are we going to get into Roth versus regular here?
Oh my gosh, I'm fighting the urge. Should I fight it? Should I
Well,
fight it or not?
I think as a public service announcement, we should spend 2 minutes
Okay.
talking about why physicians in the top marginal tax bracket should think twice
Mhm.
about choosing Roth 401k. So Ken, this is a perennial favorite on the show. We did a show in January where we predicted the most asked question for the year, and in fact, it has been the most asked question. So, with regard to just 401ks, not IRA, folks, just 401ks, Roth versus regular. I'm making $1 million a year. Roth versus regular.
Yeah, so the idea of going pre-tax is that you're at a higher tax, you're earning a lot more right now, and so you're at a higher tax bracket. And so if you can defer taxes paid on those contributions until your retirement when you're not working and you're at a lower tax bracket, then you're effectively saving money on taxes. It's arbitrage
Mhm.
on the tax rates that you're paying.
Nice, nice. Okay, so now we don't have to save kittens from trees or put out any house fires because we have done our public service for the day by telling the high earning physicians to don't touch the Roth 401k.
Yes.
All right,
Yeah.
I feel relief here.
Yeah.
Nate, how about you?
Yes. Yeah, I get this question. I still get this question all the time. So,
Tension gone.
yeah.
Yeah.
Okay.
Yeah.
So you mentioned 400,000. So you said, and I think you've told me in the past, that sole practitioners experience a high level of tax efficiency when they make around 400,000. Can you unpack that for me?
Yeah, so there's something that with the way the tax code is written, there are phase outs in certain deductions like the QBI, qualified business income deduction, which ultimately takes 20% off of your corporate distribution. So let's say your corporate distribution was 100,000, it'll now be 80,000 in taxable income. That phases out once you start crossing that $400,000 barrier.
Mm.
And then in addition, you jump from the 24% tax bracket to the 32% tax bracket. And so there's
Yikes.
just like there's just some little things that, that just kind of increase the rate of taxes you're paying on that additional money you're earning.
Yeah. So one more unit of work uh,
Yeah,
gets you less. So I've thought about this. Ben, you started the top of the episode kind of talking about, working more isn't worth it.
Yeah,
There is sort of a sweet spot. It sounds like it's 400 grand.
yeah.
So if you can live a great life on 400 grand, you probably shouldn't kill yourself to make 450.
Yeah.
But, if you're not killing yourself, go ahead and make 450 is what I'm
And
hearing.
that 400
Yeah.
is it's like just in our experience, that's a sweet spot in terms of planning too. I mean, if you have reasonable college goals and you start at an earlier age and you're planning a slightly early retirement and you've got that 400K of income, if you play your cards right, you're good. Like
Yeah.
that can work out for you.
Yeah. I think without lifestyle creep, $400,000 a year is a fantastic life, fantastic
Yep.
retirement. Um, yeah,
Yeah.
I'm with you. That 400
Yeah.
seems to be the magic number when I do
Especially in
budgeting too.
places like Missouri and Kansas and Tennessee and Arkansas and Nebraska, states with lower costs of living. I mean, you're living like a king on that 400K.
Talk about arbitrage.
Yeah.
Yeah.
Geographic arbitrage.
Yeah.
Yes.
Okay. Ken, what do doctors get wrong about taxes?
I don't think I see a whole lot of like folks getting things wrong per se on like the actual tax code.
Hmm.
If they don't know something, the physicians that come to me are generally know that they don't know something and they just need help
Mm.
and they're ready to, ask for help. But I think uh, where they can go wrong is when they're finding a tax professional and they're looking for someone, who can do it for the cheapest price. If they're looking for kind of like tax services as a commodity and they're just saying it's all the same, they get it done, they file it, looking for, someone who's the cheapest, or let's say they want to go for someone who's extremely aggressive. That's also another area where they can go wrong.
Hmm.
I heard it said one time, this is by a pension actuary. He said, when you pay with peanuts, you work with monkeys.
Yeah.
Yeah.
I mean, there's no fault to a lot of these other tax practitioners. They're probably very competent, but I think from a business point of view, for them to spend the time it takes to not only do the filing right, but to help the client with the planning, it just takes more time,
Hmm.
and that requires more cost, basically.
I think there's another element to this too for self-employed physicians, which is the bookkeeping, right? I
Yeah,
mean, I think some people think bookkeeping is really easy. I've done it. It's not difficult, but if you screw it up, it's pretty easy to do so, and it might be hard to spot. And having, maintained books now for, gosh, going on 20 plus years, I've been in and out of several bookkeepers. There's a lot of room for error there, and if it gets messed up,
yeah,
it takes forever to get it fixed. And this is one of the things I wanted to hear the listeners. I want to have the listeners hear is that your service does this. You also do the
right.
bookkeeping, so you lift all that QuickBooks stuff off their shoulders. And not only that, you make it right.
That's right. Yeah.
Yeah.
So, what I've found is that when a client wants to come to me and do their own books, um, generally they're missing some deductions or they're categorizing things wrong, and so I have to
Uh-huh.
kind of fix it anyway.
Hmm.
Um, and then also if they're a corporation, they have to run payroll, and there's some
Yeah.
nuances about payroll. Like if they have their self-employed health insurance benefits and they have a solo 401k, for example, some of those items need to be reported as part of the wages. And
Yeah.
yeah, I mean, any physician is completely capable of figuring it out, but
Hmm.
I think it may not be worth their time for the amount of time it would take them to figure it out versus, just paying for help. And then if you want, pick up an extra shift or, case or something like that. It
Yeah.
might
Yeah.
just be
One more
more
case a
efficient.
year covers all the bookkeeping. Yeah.
Yeah.
And I found when I was doing this long ago, or when we were little, that the interface between the bookkeeping software and the bookkeeping records and the payroll software was always fraught because the payroll rules are changing on a regular basis. It varies from state to state, and just that
Right.
connection, getting that right was really a mess. Always.
Yeah. Yeah. It's gotten better. nowadays. I
Yeah.
have everyone on QuickBooks and Gusto because those integrate very well.
Love
Hmm.
Gusto. Yeah. Had
Yeah.
Gusto for a while. Yeah. Okay.
Great. Okay. I'm going to take us out with the final question, Ken. If you're at a dinner party, someone asked you about your job, what is one thing you'd want everyone to know?
Uh, I think that Warren Buffett humble bragging about his low tax rate maybe 15 years ago,
Uh-huh.
haunts me to this day because everyone thinks that there's some magic way to pay 15% or less
Yeah.
of taxes on millions and billions of dollars or something. And there's one, the tax law is much different compared to then, and then two, um, it requires a whole host of complexity in organizational structure and just money to achieve something close to that nowadays. So
Nice. Well put. I wouldn't have expected to hear you say that, but it rings so true. I've
Mm-hmm.
encountered so many people that are like, I know there's got to be some more way to save taxes. I'm like, are you doing this? Yeah. Pop, 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 pop. We go down the list. They're doing it all. And
yeah,
there's no like you can't convince them that there's not any more way to get lemon out of get juice out of that lemon. Like, you reach the bottom. They always think there must be some magic trick that if I could just find the right CPA, you know.
yeah. I mean,
Yeah.
I've looked at it because I've definitely been pushed on that, and
Yeah.
I look at it all the time, and there's unfortunately there's just isn't a whole lot at this point with tax strategy. Um,
Hmm.
ChatGPT can serve up the strategies. And I would say at this point, the value that I provide is maybe 20% of the strategy and planning, and 80% is the compliance. Basically
Yeah.
making sure everything's documented, all the transactions are classified correctly, and that every tax position we take is well supported in case the IRS ever asks. Because
Mm-hmm.
Got it.
that's really, you know, a painful thing is going through an audit.
So, listeners, I want you to hear something. So, there is a limited list of tax strategies, and in my effort to cause people to realize that, there is a bottom to this well, I actually wrote a page called Tax Strategies for Doctors. It's easy to find. If you go to Google and you Google tax strategies for doctors, we come up as number one and have for like the last decade. So it's all there. Everything that I can think of is there, or at least everything I can think of that's legit is there. It's right there. In fact, we're looking up a case the other day in ChatGPT, and it found our tax strategy page and cited it. So, you know, that there is a limit. So, before I take us out, Ken, tell us how we can connect with you. Where can we find you?
Sure, yeah. Just visit my website. It's keneremita.com. KENEREM as in Michael, I T as in Tom, A.com.
Fantastic. Okay, Ken, thanks so much for being on today. Folks, if you're looking for a financial advisor, you've got one here. Visit physicianfamily.com and click on that Get Started button. If you're not ready for that and you'd like to ask us a question or ask Ken a question, shoot your questions to podcast@physicianfamily.com. And until next time, remember, you're not just making a living, you're making a life.
Are you ready to turn worries about taxes and investing into all the money you need for college and retirement? It's time to make a plan and get on track. To find out if we're a match, visit physicianfamily.com and click Get Started. Or you can ask a question of your own by emailing podcast@physicianfamily.com. See marketing disclosures at physicianfamily.com/disclosures.